to the final part of the Collections Technology Think Tank virtual event, 4.2 as we're calling this one. Our 7th event, but our 4th session of today. So just a real quick intro on the platform that you've got in front of you. As ever, I want you to engage as much as possible. Bit of information on the event there and our future events as well, which I'll round up at the end of today. We've got some other events planned. You've got some information on the speakers. You can download information on our and see who supported the event today as well from our sponsor perspective, and view links to sign up to our future events as well. So that'd be really good. But the key thing in this session, if you can and are willing, is to ask questions. We've got a speech bubble icon there. Click on that, ask your question. It's fairly anonymous in terms of the rest of the audience won't see it, so please don't be shy and ask the questions. But yeah, we'll move on to this session now. Last of the day, as I mentioned, discussing customer vulnerability. I want to say a big thanks to all our sponsors today, but especially to the sponsor of this session, who is the Connected Data Company. You can find information on them on the icon on the left there and view a link to them and a bit of background to them. But yeah, we've got some great panelists lined up. So what I'll do now is hand over to our event chair, Chris Warburton from our strategy, who will introduce our panelists. You can hear a bit more about that, and then obviously we can start our discussions. Chris, over to you. Thank you.
Thanks, Colin. So welcome to session 4. Thanks everyone for joining. Hopefully you've been through the rest of the sessions as well. So this one's going to be on customer vulnerability, and a vulnerability, I suppose, and financial vulnerability as well. So we've got a great session for the next 50 minutes or so. I mean, I'd say that vulnerability, we've all been on this journey around vulnerability and vulnerability for customers, largely, if anything, to be honest, sort of driven probably by the regulator, I think, to be honest. But I don't think anyone would say that the whole vulnerability journey that we've all been on has really been a bad thing. And I think a lot of us probably feel a lot better about the jobs we do as a result of vulnerability kind of coming through. However, I'd say that times are sort of changing. And this whole idea around vulnerability, as we used to think of it sort of like 5 years ago, sort of like it was almost like the lines are kind of blurring now to talk about financial vulnerability, financial difficulties. And so really this discussion is like, where do we sit with vulnerability, and sort of like where do we go from here on in, and in the light of the back of cost of living and potentially economic stress that's going on in the background. So that's really what we're going to talk about sort of on this session. With me on this session, I've got three great speakers. We've got Mark Porter, who's the head of arrears and litigation at Pepper Advantage UK, who are a mortgage and loan servicer. We've got Louise, who's the senior insight and outreach manager at the LSB, the Lending Standards Board. And we've got Anthony Sumner, who's the director of data and analytics at Connected Data Company, who are in the data and insights kind of space, and they're a company there as well. So all of you, welcome to this session. Thanks very much for joining us. And I suppose the first question, just to kick off, is what's the current level of vulnerability that you're kind of seeing in the industry today? What are some of the characteristics? Are those characteristics kind of been chasing it? And Mark, if it's okay, maybe I'll come to you first in terms of what you've seen from your time and sort of in collection shops and sort of like in creditors as well.
Yeah, absolutely. I mean, it won't shock you to hear that we're seeing more examples of vulnerability directly off the back of the cost of living crisis. I think it's quite an interesting situation we're in now, in that we're seeing a lot of customers who are still in work. So you've got that sort of workplace poverty where people are employed, but they're struggling to maintain their bills or outgoings. The FCA did their financial survey, live survey of a couple of months back. They published, and when you look at some of the data there about customers feeling the burden of the current situation, impact on mental health, stress, well-being, we're also seeing, I think, some challenges in getting customers to engage. I think there's still a little bit of that. Okay, the current situation feels quite overwhelming for some people. I think as well, what we're seeing at the ground level is customers are a little bit unsure still around support. And we've seen recently the government, certainly the mortgage space, come out with an agreement around the mortgage charter. We're also seeing, I think, a little bit of that sort of post-COVID impact. We've gone through a couple of years, the pandemic, which was quite challenging for people, straight into a cost of living crisis, which hasn't done anything positive for people's well-being and health. But I do take one positive, I think, for the current situation, that I think COVID showed a lot of people who have maybe never been in difficulties before. The lenders are there to support and help them, and there are options available. But we are seeing an increase, certainly in mental health space, and customers are more willing to disclose vulnerability now, perhaps, than they were historically were. I think the stigma has gone, certainly in the mental health space.
Yeah, I mean, Louise, I mean, you obviously work across a wide variety of people in the industry. I mean, what's your kind of sense? Is it sort of, chime with what Mark's kind of saying?
Yeah, absolutely. So, rises in inflation, unpredictable changes in interest rates, and the impact of the cost of living crisis absolutely mean that consumers and SMEs alike are facing increasing challenges in navigating their financial circumstances. And I think the impact of that is still unfolding. It's still yet to be fully understood. But what we do know, and I think it does resonate with what Mark was saying, is that those who previously just about managed are now more likely to creep towards experiencing financial difficulty. Likewise, people who were already in difficulty are feeling more of a pinch. And obviously, I'm talking there about financial difficulty, Chris, but if you consider customers who might become vulnerable due to a life event, physical illness, mental illness, I don't think it's hard to see how the added economic and non-economic strain, put my teeth back in, that we've talked about can exasperate or lead to heightened vulnerability. So I guess for me, yes, vulnerability is evolving because the complexities that customers are facing are evolving.
Yeah, I mean, do you think that or something like the definition of vulnerability? I mean, is that sort of changing over time? And we're chatting just before we started a little bit about, we used to have vulnerable, potentially vulnerable. Now we're sort of like talking about characteristics of vulnerability. I think financial vulnerability is now being included. I mean, it feels like the definition of vulnerability is becoming a much more sort of broad kind of church than it was before, and that when it seems a little bit more narrow. I mean, is that a sense that you're kind of getting that's the way we're moving? I mean, maybe Louise, and I want to talk a bit about data with Anthony. I mean, what's your view?
I don't think that the definition is changing. I think our understanding of how people can be vulnerable is evolving, and the ways that people can be vulnerable are evolving. So I think we did have a bit of a debate, didn't we, before you even joined this call, and we talked a little bit about how, maybe a decade ago, you started to slowly identify customers who might be vulnerable because it was a new concept at that time, but that's been embedded for quite some time now. And so I think we're starting to understand the nuances of how vulnerability can impact customers, the nuances in the way that people can be more susceptible to harm. So I think it's more evolving, not changing.
And I suppose part of it is almost like self-identification as vulnerable. So I might phone up and say, look, I'm going to self-identify, I've got this particular vulnerability or a risk of vulnerability, versus almost like people are sort of quiet in the background and never say anything as well. I mean, like, how do we sort of manage that? Because that feels like that's quite a big block of people who we're not identifying, almost like have proactive conversations. I mean, and it gets into sort of like the data space kind of, Anthony, in terms of like, it's like things we can do around that.
Absolutely. I think recent studies have suggested that up to maybe half are prepared to disclose and declare their vulnerability, but half aren't. So in that element that aren't, we need something that's more proactive, and use of technology and data and models is absolutely key to that, and having that richness of data insight. So we're working with a number of companies that are looking to understand the level of kind of blind spot around vulnerability. Some have a definition or a view of vulnerability, but certainly when they cross the lines and cross the bridge and have that wider perspective, they're clear that they've got blind spots, they've got invisibles that they're not aware of. So looking then to look at a whole range of what data insight could help identify that group of people, and lots of different data and early warning indicators to look at that as well. I'll talk a little bit about that later on as well.
I mean, I suppose you've got sort of like people who don't want to say that they're vulnerable and really need the help, but you also might have people who are almost like self-identifying because necessarily, I mean, is there a fear there that people are self-identifying because, look, it's in the media, I know I can get help, so I'm going to phone up, I'm going to put my hand up. I mean, is that even a bad thing, right? So are we getting more self-identification? Is that even a bad thing? Because at least you're then having the conversation with people. I mean, Mark, I mean, what's your kind of view on that? I mean, there might be a fear that, well, you get more people self-identifying, so therefore we've got to, give different treatment to people. But actually, if they're actually calling up and you can actually help them and understand their situation.
Yeah, and that's my thing
anyway.
Yeah, it starts the dialogue. And I think you can then focus on a solution to whatever situation they're in. I think, tying back to what Anthony was saying, I think technology definitely has a place when it comes to understanding vulnerability, supporting customers in partnership with the people side of the equation, making your staff are trained, making sure you're having good quality conversations, you're displaying empathy. You're also not falling into that trap of judging people. You genuinely want to understand what's going on. So people self-disclosing vulnerability, I think, is to be encouraged. I think it's a good thing. I think that I'm mindful of your point, though. There's that cohort of customers who are not disclosing and not engaging. And I think that's always been the biggest challenge in the collections risk management space. How do you use technology, comm strategies to encourage that interaction?
Yeah, and Anthony, if there are, almost like you can use data obviously to try and proactively identify people. I mean, are there early characteristics that we think we should be looking at? I mean, that need to be on our radar screen that potentially can be triggers to kind of prompt some of that.
Absolutely. I think across different data sets, you're typically looking for that kind of erratic spending behavior or sudden declines in income. It could be an income shock, or it could be just a reduced income, or it could be an event like unemployment. You're looking for life events as well, whether it's bereavement or relationship breakdowns, seeing a surge in new kind of credit searches for different credit facilities, especially where you've seen that in the kind of high cost short-term lending space. And equally, to a point where you're seeing loan purposes being taken, the purpose of that loan being for kind of vulnerable kind of circumstances, such as a utility bill payment as well. So lots of different early warning indicators with the ability to connect it together to form a view of then different kind of degrees of vulnerability as well.
And if you look at the levels, because that's quite hard data, if you're looking at, in like independent view of the data, I suppose, rather than self-reported. I mean, are you seeing those levels increase? Because that's quite an interesting kind of trend, because it's like for like, rather than, it doesn't have the self-reporting elements in it. I mean, what have you been seeing?
Absolutely, we're seeing kind of volume surge in some of that kind of high cost short-term lending volume base. Being loan purpose for different reasons for that, again, linked to more vulnerability types, like it could be, I said, utility bill payments, could be help with debt repayment as well. So certainly seen an increase in that as well.
Yeah, and I suppose that the linkage there between, I suppose, financial vulnerability, affordability, and then other types of characteristics of vulnerability and like life events, mental health. I mean, that seems to be like ever more closer linked in all of the research we've kind of seen. I mean, looking at things like affordability, and we're so reliant, Louise, we're so reliant on the SFS as an example. I mean, is that really the best measure to sort of like to pull this stuff out? I mean, what's your kind of view on that in terms of like how best to measure affordability, capacity to pay, I suppose, financial stress, those kind of things? I mean, what's the right sort of questioning process we've got to kind of go through?
Well, I think we have to have that open dialogue with customers, as Mark said, and I think it's about using a blend of information that's going to help us get that view. So I guess it starts with being able to actually have the right conversations. It relies on being able to get that accurate information from customers. And then it relies on staff, frontline colleagues, being able to ask the right questions to get that full picture. And so I don't think it's a one-size-fits-all approach. What works for one firm is going to be different for another. But I think... Sorry, Chris, you go.
No, go ahead. So I suppose these self-disclosed values, particularly, for example, on affordability as an example, versus open banking data. I mean, how reliable can we be on self-disclosed kind of information, and how should we treat that? Should we treat that any differently from the harder data we were just talking about, say, with Anthony?
What do you mean by that? Sorry, do you mean, do we rely more on hard data like open banking data versus the information provided by customers?
Yeah, should there be a different treatment as a result of the different data sources coming through?
I think it depends on the view that data allows you to get to gain. If customers are self-disclosing or providing that information to you, does it give you that complete view? I think that's a case-by-case decision to look at the information you have and to understand if it's given you enough information to understand what can this customer actually afford, where it seems that they might not be able to afford it, why that might be, what additional support they might need. And it might be a conversation with the customer gives you that view. it might be that they themselves need a little bit of help, like open banking, to gain access or to give you access to more of their financial commitments. So I really think it depends on the level of information that can be gained depending on that method.
And I suppose what's the kind of the role of data that can kind of play within that? I mean, both Mark and Anthony, in terms of, like, maybe I'll go to you first, Mark, in terms of like the data to support the agent in that conversation and to support the customer in that conversation as well. I mean, like, how do we think about that within the mix? Because you've almost got the customer psychology aspect to it, but then you've also got the hard data aspect to it, and you've got to try and work through to kind of get the best outcome, really.
Yeah, I mean, just looping back to what Louise was talking about there, I think that we've done a lot of work at Pepper thinking a little bit about how we remove barriers and make it easier for customers to disclose, how we can get better insight. And there are these tools like you've referenced where we can use open banking to get insights into the financial position, bureau data. When you're in an operations space and you've got an agent on the phone talking to a customer, that data needs to be accessible and it needs to be presented to the agent in a way which can be used to inform the conversation and lead to the right customer outcome. There's a balance here. Too much data can also be not a good thing. You can overwhelm the conversation. You can also fall sometimes into a trap of almost profiling customers, using data to put them into these blocks and forgetting that this is an individual human being you're speaking to. The data can inform the conversation and drive the questioning and the understanding, but there's a human element to it as well. And so I'm a big fan, but looking at how these tools can fit in. And I think the open banking demo we had recently, it was sort of a side of the desk type tool, where when you're having the conversation, you can reference its content if the customer gives you the consent to complete an income expenditure. So I think the technology can help, but there is a word of caution there about how you use it when you're having the conversation.
Yeah, and I suppose, Anthony, I mean, how do you sort of see that in terms of like blending the data that you might feed versus the agent piece and those softer skills? Because it's almost like the symbiosis between the two to a certain extent, as Mark's kind of explaining.
Absolutely, I think it's that combination. So I think where you've got an engagement with a customer, we're seeing much more use of, again, from a technology play with, say, in the digital channels, more self-declaration forms for consumers, sensitive questioning through agents as well to help try and again identify that questioning to use to help identify vulnerability. And then even technology completely taking over where it's, detecting vulnerability through key phrase and detection and speech patterns based on what they're seeing from the customer. So I think in terms of that engagement with the customer, maximizing technology there is really important. I think, but then complementing it where there isn't a face-to-face engagement or a digital engagement, then using that data that I talked about earlier to kind of identify and segment your customer base in terms of different degrees of vulnerability as well.
Yeah, I mean, there's a question just here, just at the top around avoiding giving vulnerability to the wrong delinquent customers, criteria, I suppose. Do you need to exhaust all collection methods before offering a vulnerability program? And I suppose that's the little bit of the split between vulnerability versus financial difficulties and whether we need to explain all of that. I mean, Louise, I don't know how you sort of react to that kind of question around, do you need to do other stuff before? I mean, how do you make sure there isn't too much vulnerability or too many people in the vulnerability program?
Well, I want to make sure I've understood the question correctly. So are we saying here, what are the risks if we classify too many customers as vulnerable?
Yes.
I mean,
are there risks? I would say, I'm going to interrupt. Say, are there risks if you do that, or is it is it really based around what the customer says?
Well, I don't think customers can help the circumstances that they find themselves in. And if more customers are finding themselves vulnerable, which would not be ununderstandable given the economic factors we've talked about, then we can't reduce the level of support that's available. I think would be my short answer. Of course, we need to balance trying to achieve the right outcome for the business and for the customer. And that might involve having some really rounded conversations about the status of a customer's account and where an account needs to get to. But it has to be coupled with what is the customer experiencing and what support might they need. Because to be quite honest about it, you're not going to get the outcome you want if the customer's not receiving the support they need. They're going to disengage if they're not getting the support that they need.
I mean, it does feel like the the vulnerability piece has sort of changed to sort of like stop collections to now being what's the right treatment for the customer in that situation to get the outcomes that they actually need. I mean, that's the subtle change between the old world and the new world. I mean, Mark.
That's all collections now, isn't it? Financial
Yeah.
difficulty, vulnerability versus other. It's
Mm.
we're a lot of teams have rebadged, haven't they? They're not collections anymore. They're financial support, etc., etc. I think also, just to add on to what Louise was saying as well, I think that when we're considering this vulnerability versus not, it isn't black and white. I think within vulnerability, there are different degrees of vulnerability as well. And it's also worth noting from an operational perspective, there's some really serious extreme types of vulnerability, which takes some very close management. It can be quite heartbreaking and difficult to deal with. Victims of crime, domestic violence, financial coercion, terminal illness, cancer, etc. So it's a wide spectrum of scenarios and support and treatments that are needed. And that's why I think this blended approach of using data, technology, but also good, well-trained people, and being able to identify that more extreme vulnerability as well, and understanding when it needs to be really held tight and looked after the customer.
And what should be the approach around making sure that you've got the right people, the right skills in terms of actually training that, and also handling those conversations as well, because they can be difficult conversations from an employee point of view to handle some of these, particularly some of these extreme ones. I mean, it's difficult. You need to be trained to be able to handle it appropriately and handle yourself appropriately as well.
And that's where the job of somebody working in collections environment has changed dramatically in recent years. We're dealing with some pretty challenging conversations, and certainly when you get into extreme, like mental health, suicide scenarios, we signpost their support. We're not trying to manage somebody's life for them, but at a human level, we want to help them and get them on the right path. And I think, there's also a staff well-being element to the discussion as well, because the FCA have pointed this out back when they did that pay breath G18 around making sure your staff have got the right support mechanism too, because you come off one of these very difficult conversations. If you're not in the right mental place, it impacts the outcome for the next customer you deal with. So I think there's a lot of different layers to how we approach vulnerability. But on your point about training, I think one of the challenges that collections departments have is how to train not just on the theory, but practical skills, soft skills, how to deal with customers if they're crying, they're upset, they're suicidal, bringing it to life for the agents.
Yeah. So, and I suppose just going back to things like automation, I suppose, and automation of things like open banking. There's a question came through around open banking as an example. I mean, how do we sort of like promote, I suppose, having a conversation with a customer versus getting the data and promoting things like open banking, which hasn't actually had a huge sort of uptake rate as initially now. I mean, like what are the keys in terms of like gathering some more of that data to be able to have better conversations with people and be able to have conversations in maybe like a way that doesn't distress the customer any more than it needs to as well. I mean, have you seen any kind of themes around that, I suppose, Anthony, in terms of like ways of promoting sort of data gathering, both, directly getting the customer initiating it versus just sort of sitting in the background and sort of scraping it from other sources?
Definitely. I think again, it comes back to a data-driven approach. I think if you can understand your customer base and their preferences, so somebody will have more of a preference at open banking channel and doing that versus somebody who more of a traditional channel. I think it's been, again, using the data to inform that, so you can maximize that customer engagement. I think what we're finding is it's all very well segmenting the customer base, but it's also really important that you have up-to-date contact information as well. So we're seeing quite a demand for understanding, first of all, that people are living as stated, or actually are they resident elsewhere, and equally, have they got the most up-to-date contact information as well, in terms of mobile, email, landline information too. So I think it's very well, segmenting, but you've got to be able to fulfill and execute as well, and make sure that you are engaging with the customer at their residence, and equally with the latest contact data as well.
I mean, we put a lot of emphasis on, digital, self-serve. I mean, throughout the journey, we heard it even on these calls here. I mean, at what point do we need to introduce friction in the process to almost like say, is everything okay? I mean, almost going back to that human kind of approach. I mean, Louise, I mean this idea around frictionless journeys and whether we actually now need to overlay the friction back in, just almost as a check-in to say, well, you know, are you all right, and do you have updated contact details? But also there's the vulnerability element to that as well. I mean, are we doing enough in that kind of space?
I think getting the balance right between negative and positive friction is really, really, really important. So I think friction can sometimes have that bad reputation of it's a negative thing. It slows the journey down. It gets in the way of it being effective. But sometimes friction can, to your point, it can be important. So I'm just going to think here of an application for a new loan. If within that application it comes through that a customer has some kind of vulnerability, which means that they need a little bit longer to process information before taking out a product, putting a stop in the process to understand that impact and maybe allow more time, that's going to be vital friction, vital and positive friction. So I do think friction can play a role. It's about balancing and understanding why it's needed and the impact that it's going to have. Is it going to get better customer engagement rather than causing negative customer engagement?
And do you think that will kind of change? I suppose we've got consumer duty, which I know we've mentioned a few times, but coming through in terms of like good customer outcomes, because it allows you to get better outcomes if you're having that engagement earlier, you're identifying potential issues. I mean, that it feels like that needs to be in the back of our mind at some point. I mean, and Mark, I mean, as we think going forward, I mean, is that going to change the way we think about collections, the collections process, but actually our products in many ways?
So you're asking around how consumer duty is going to change?
No. So we've got consumer duty is going to be focused on customer outcomes. Those earlier conversation to then look at better outcomes, will that enable us and will that change our journeys and the way we think about the collections process?
Yeah, absolutely. And I think that I mean, linking back to consumer duty, been given quite a lot of thought to the world we're in now and the engagement piece. And how do we we spoke earlier about you've got those customers that will self-disclose, that will actively engage, and those that won't. How do we promote engagement and encourage? I think you're right. Early engagement's critical. I think coming back to Anthony's point, utilizing data in a smart way is critical. But I think that we need to be more creative in the way in which we engage. And I think that I mean, it's almost like the holy grail of reaching out to customers. That early engagement is the right contact medium strategy based on an understanding of the customer. But I've seen some quite creative things out there in the industry. Like if you go onto websites back in the day, it used to be FAQs. Some websites have got things like videos, downloadable documents. But also, I think from that engagement point of view, we know there's the embarrassment factor that a lot of customers have. So digital can be a really positive way of engaging the customer. But also you have the challenge of you've got quite a portion of the UK, which tends to be quite a few vulnerable customers that are digitally excluded, that don't have internet access. So it's making sure we've got a contact approach, which is multi-channel, uses data, but also can adapt and flex as needed. And that's why I saw, not to take over Chris's job from him if it's not too cheeky, but I was quite interested in what Anthony was saying earlier about the data and segmenting. And, quite intrigued as to how that data can feed in a practical way into contact strategies. Because that for us in collections is the holy grail, getting contact strategies that get the non-engaging customers to engage.
Yes. Yeah, to answer that, so I'll go back on that question now. I mean, what that's going to be a question I was going to ask, which is like, what other technology or data do we need to look at to be able to identify those? I mean, are there new segments we can go out and actually look at? Anthony?
So I think picking up on Mark's point, it's a really good question, because I think lenders are kind of evolving as they go in terms of understanding vulnerability and taking action. I think the biggest, hardest bit is operationalizing it and into your day-to-day kind of customer management, debt management strategies. But again, I think the first step in all of this is starting by monitoring your customer base and segmenting it, because to Mark's earlier point, there's a spectrum, and really by identifying the most vulnerable customers, you want to extend support to those potentially most at harm. So understanding that, I think setting kind of different stages in the evolution, that's the first stage, understanding, monitoring. And then once you've then understood that, is to operationalize it. And I think, again, different evolutions with different customers, but definitely starting to operationalize that into day-to-day strategies in terms of, collection strategies, persistent debt strategies, and so on. But it's an evolution. I don't think people are there now, and I think Consumer Duty will help give that guidance to lenders as we go forward. But it's an evolution, I think, starting by at first understanding it, monitoring it, understanding those blind spots, segmenting your customer base appropriately, gets you into a great space then to be able to operationalize and make it real for customers as well.
Yeah. Do you think this the whole idea around labels and labeling it vulnerable, is that actually helpful or not? Because we're sort of like, we've used it interchangeably even in this conversation. We're saying we're talking about vulnerable customers, and yet we're saying it's really the whole of the base. We're saying, Mark, you sort of talked a bit about, there are extreme versions of vulnerability versus less extreme, and it is almost like, to use your word, Anthony, this spectrum. Is it actually helpful to use the word, the label vulnerable, or is it something we need to move away from, or does it help us sort of have the conversation?
Customers definitely don't use the term vulnerable, that's for sure. It's a badge, isn't it? It's a name. It implies, I think, it's to some people it implies weakness, doesn't it? It's I'm not sure it is a helpful term. It's a term the regulator uses, but certainly when we in an operation space, when we're talking to customers, we don't refer to them as vulnerable, and we wouldn't use it as a description.
But even in terms of collection strategies, as an example, you can have vulnerable. Actually, you actually need to have every single different types of support strategy rather than a vulnerable strategy, right? Or a vulnerable department. You need to have all the different, the whole suite of it, right? So
absolutely.
Is that a language that we need to change, that we can change in the language can then change our behavior? I mean, what's your kind of view on that? Or Anthony, what's your kind of view on that? You sort of get a different aspect to it from a data point of view, because you get to see the wider spectrum.
Yeah, I think to me, again, it's by understanding it as a segment level, understanding the degrees of vulnerability allows you then to take different action. I think some of the data partners we work with, they do categorize vulnerability. So they categorize highly vulnerable, historically vulnerable, currently vulnerable, not vulnerable. It's a really high level, but I think it's useful to understand whether somebody's highly vulnerable now versus somebody who's been historically vulnerable, because you would engage with them differently. I think, again, it's it's an evolution. I don't think we're going to get there overnight in terms of operationalizing to that. But I think, again, understanding and starting to internally label and segment is useful.
Yeah. I mean, Louise, where do you think we kind of go from here, from a wider industry point of view, in terms of vulnerability, and then sort of like what it's going to evolve, where it's evolved to, and what it's going to evolve into? You're on mute, Louise.
Apologies. How long has it been since the pandemic? And I still do that sometimes. I just want to circle back really briefly to the question that we asked there around why use the term vulnerability. Does it lose its meaning, or is there should we be using different terminology? I think we need to question and understand why we use that terminology in the first place. And really it's to drive a consistent understanding across firms of how customers might be impacted, and then to drive a consistent approach to customer treatment. So I think we do need that consistency in terms of terminology, but like anything, things can lose their meaning, can't they, if we say them 100 times? And I think actually that's why a discussion like today is really important, because it helps us pause and go, what do we mean by vulnerability right now? How has that changed? And we've talked about that. It's evolved, and it's going to continue to evolve. So I think it is important that we have that consistent terminology, if for no other reason than it gives us that consistent benchmark to work from. But we should be doing what we're doing today, and we should be looking at how that's changing within our organizations.
Yeah. And what do you think, what do we got to watch out for? So where do we need to, put extra emphasis on? So we took a lot of emphasis around mental health. Mark, at the top of it, you talked a bit about cost of living. I mean, are there upcoming almost like characteristics of vulnerability we've got to have on the radar, and we've got to do more to try and help support customers? And what more can we do to support customers? Are there areas of particular focus that you're concerned about?
I'll take that one to begin, if you like.
Go ahead, Louise.
I think, we know that customers are undergoing some really significant economic factors right now, like the ones we talked about at the beginning, the cost of living crisis, increase in inflation. I think also that can be, and I think Mark made this point earlier, that can be really challenging for frontline colleagues, right? I mean, they might not have their own lived experience that tallies with what a customer's going through, and that can cause a bit of a disconnect. So I think we have to support frontline colleagues to bridge any gaps in their life experience, help them understand what customers might be able to go through to allow them to continue to be able to empathize and reach the right outcome. I think that's going to be an important thing to focus on in the future.
I mean, do you think we can get ahead of some of the issues in terms of like providing some more bespoke training? I mean, Mark, you're quite passionate around training agents, in certain aspects, but you talk about like financial difficulties as an example, that we might be looking to, decline in terms of the economy and maybe like job loss, or, dealing with some of the issues with that relationship breakup, those kind of things. Are there areas that we can target to try and get ahead of that, do you think? Or
Yeah, I think on the training front, and I use training in the broad sense, I think helping agents understand exactly what's going on in the economy out there for people. So, I spoke earlier about a lot of people in employment. They've exhausted their savings they built up over COVID. We've seen a lot of people maxing out their credit cards and using credit cards for day-to-day spending. And then they're falling into financial difficulties downstream with priority debts like their mortgage. So it's making sure that when we're having the conversation, we've got the right questioning skills, we can display the empathy, but we can understand not only the present situation, but what's coming. But also quite mindful with the cost of living crisis. We're seeing the Bank of England base rate rises, which economists generally of the view haven't peaked yet. We know that it takes a while for these base rate rises to filter through the economy as people come off their fixed rate. We know as well that as people are using their credit cards quite often for day-to-day spending, as the Bank of England put base rates up, it also impacts their credit card interest rates. So we're in a situation where the cost of living crisis hasn't peaked yet in terms of its impact on the economy. And so I suspect there's more twists and turns at a macroeconomic level to come. So helping our staff understand what customers are going through, understand the impact, but also understanding as well that the people that work for us are going through these same cost of living challenges as well. So making sure we've got the right support mechanism. But just looping back to your question around training, I think it's about bringing it to life. Again, my point about not just theory, practical tips, hints, making sure that there's a really good understanding of the various solution options that are available. But also, I think there's a benefit in making sure as an industry we've got a good partnership approach. So I know we at Pepper, we recently joined the Money Advice Liaison Group, a big advocate of them as an organisation. I think making sure there's that good partnership approach with the debt advice and the specialist advice sector, making sure that we're listening to some of the guidance and input they can give us. So where you've got specialist support organisations around Macmillan, Cancer, Samaritan, suicide, etc., listening and thinking about what we can learn from them and building that into our comms, our strategies and our support approach, but also what's on our websites.
I mean, you're talking a little bit there around like how do you join the dots on
Absolutely.
all of the different elements that are out there. And Anthony, I'm going to ask you a bit about joining the dots when the different data elements are out there as well, because it's not necessarily one particular indicator. It might be like a suite of indicators that go through that actually indicate that's characteristic of potential vulnerability. I mean, how do we start thinking about that? And particularly, how do you embed that kind of data and that kind of insight into operational processes that then links to what Mark said in terms of the training and the response there? I mean, what's the best way to think about that, and potentially to do it quickly as well, because I know we've been expecting a decline in the economy. It feels like it's starting to happen, but it could accelerate very quickly for folks.
Absolutely. I think you make a really good point, because in the collections and debt management space, I think it's true to say from a data perspective, data has been underinvested in, compared to others probably stage of the credit life cycle. And this is bringing it into kind of stark contrast now. So having that, we call it that 360-degree view of the customer from a range of different data sources. I think it's, ranges from credit bureau data, contact and lifestyle data, speciality data around, the VRS, like the disclosed vulnerability data, property data, open banking data, open payroll data to form a view of income and affordability. It's forming that kind of investment and connection of that data in the debt management space. That's really important to get that full view, so you haven't got those blind spots that I talked about earlier.
And how are you finding in terms of like integration into collections processes? I mean, how easy is that, or are people finding that, and what kind of journey do we have to go down to actually get that into our collection strategies to do some of the stuff that Mark was talking about?
I think again, it's making sure we don't overwhelm lenders and with too much data. So we go from one extreme of being underinvested in to having too much. And again, that's where we play a part in trying to simplify that data down towards that next best action. Again, understanding the customer, the segmentation we've done around that customer to guide that and have that a part of the collection strategy. I think to allow an agent to know that insight that they may not have on a screen today because the data behind it hasn't been there. I think that's a case for real data investment for me and data insights.
So it feels like, I mean, we've obviously come a long way, I think, in terms of vulnerability treatment, but also the maturity of the conversation we're having around it. But I mean, Louise, if we are as we're standing here today, I mean, what are your concerns around what we need to do now in creditors or in issuers, and like what do we need to do now just to make sure that we're ready, or what might come in the future?
I think we have to be cognizant. It sounds really simple, but we have to be cognizant of the challenges that customers are facing. We have to make sure that's understood throughout the organisation. To the points that have been made, we have to make sure frontline colleagues understand those challenges and are supported themselves. And I think we have to move to be proactive rather than reactive to those circumstances as well. We know that there's going to continue to be unpredictability in interest rates, or there's likely to be. We know that the cost of living crisis isn't going to go anywhere overnight. So rather than wait for those things to unfold, how can we get ahead of that? How can we accept that that's what the future might look like? And there's a lot of power in that, right? Because we did that, I think, in COVID. We accepted there was a situation that was happening that was going to unfold and take some time to resolve. And we saw some incredible effort being made across the industry and some really good outcomes as well when everyone came together, faced into the problem, and proactively looked to sort of work through that. And I think it's going to take that same sort of united effort and that same kind of proactivity.
I mean, do you think we kind of need that more sort of like sophisticated approach and understanding around vulnerability? Because if we're just reliant on the almost like the more straightforward approach was, put them in a vulnerable bucket, then I mean, that's going to be a large population very quickly, and we need to have that much more sort of sophisticated, kind of tailored support for customers, sort of like now, really, to sort of head off the potential volumes or potential issues in the future. Really, that sounds that way. I mean, Mark, I mean, what's your kind of view in terms of like what we got to do now?
Yeah, I think it's an interesting question. I think going back to what everybody's discussed, we know we haven't reached the end of this cost of living crisis. It's going to be ongoing. Reviewing our solution options, making sure we've got the right options for our customer base. I think one of the positives of Consumer Duty is that requirement to understand who your customers are. And I think downstream, when they do get into financial difficulties, that data can also be a basis for tailoring strategies in your approach. I think, as I've mentioned earlier, making sure you've got multi-channel approach, you've got technology in place that enables the customer to engage in the way they want. I think for me, it's interesting because the digital self-serve piece is interesting. Some lenders way more downstream than others. I think in this digital age now, if lenders are not, or services are not in the digital space, they need to get there very quickly. But you need to make sure, though, coming back to my point about the human side, it's that blended, joined up approach. And I think that's the bit that as an industry, we've still got a lot of work to do. I think we've come a long, long way in recent years. I think, echoing Louise's point, there's a lot of really good lessons that came out of the COVID experience and about how to engage with customers, how to support them, how to see risks and challenges as they're emerging. I still don't think we're particularly joined up. And I think that also links to there's limits to sharing data. So customers still have to disclose vulnerability to every lender. Customers still often having to complete multiple income and expenditure forms. I think customers are still sometimes struggling to get through on phones as they get busy. So there's resourcing challenges, I think, in the collections space. So making sure as we face into the next 6 months to a year, collections departments need to make sure they're thinking about the data they need, but they're thinking about their strategies and their resource up to deal with, I think, more demand, which is going to come.
Yeah, I mean, it feels like, say, we've got more maturity, but it feels like it's the implementation of that is almost like it just feels like it's so needed, because if we don't do it, it's gonna have some some consequences we don't necessarily want without necessarily getting the right outcomes as well. So it's like now's the time to really put some of that in like now. I mean, and from a data point of view, I mean, Anthony, from your point of view, I mean, what do you think, what's the next 5 years going to look like, both in terms of like data access, both in terms of like embedding within the processes? I mean, as Mark's saying, it sounds like there's a lot more to do, but what's your kind of view of like where we could be?
Yeah, it's a really good question. So I think in terms of making sure again that we take a really data-driven approach to it and maximise reducing those blind spots I talked about earlier. I wonder whether, if you think about how data evolved and we've created different views and indicators for lenders. So we have a view of credit risk. We evolved that to a view of indebtedness. We evolved that to a view of affordability. Why couldn't we evolve it to a barometer of a view of vulnerability as well? So it's an indicator, an index that you could easily, not easily, but factor into your strategies. But I think that's how the industry's evolved, to have a different view. I've mentioned credit risk, affordability, indebtedness. I think that's where we're heading next, a view and a really clear view, especially in financial vulnerability, of a barometer of vulnerability as well.
Well, I do think the idea of like almost like tracking it using hard data to say, well, look, this is how society's kind of changing, I think is particularly interesting, especially when you've got this economic background as well. Like what's the hard data saying around how things are happening, and then obviously we then have to support customers as well, which is also super important as well. So it's interesting stuff.
I think it picks up on what Louise said, it's about consistency. So I think using hard data in a consistent way at least gives you a consistent treatment and view. And that then would at least internally for organizations to say, whatever data and segmentation they're using, at least they're doing it in a consistent way.
Yeah, I suppose I sort of said that, but it's also, at the end of the day, it comes down to customers who are human and having good outcomes for customers. And no matter what the hard data might say, you've got to have the good outcomes, and the customer has to feel like it's a good outcome. Absolutely. And be a good outcome for them as well. So it does also, like, it all links back, so we can have, the data we want, but it's really the blend of the two, isn't it, to make sure that we've actually got good outcomes. Well, I mean, Anthony, Mark, and Louise, thank you very much for spending the time with us today. Definitely some interesting things to think about labels, about how we think about vulnerability, how we sort of blend it together, and how it's getting a much more sort of like mature approach as well. I think that's we've been on a journey. Sounds like we've still got a long way to go, but definitely making a lot of progress. So thank you very much. And Colin, I'll hand back to you.
Lovely. Thank you, Chris. And obviously thank you to our panel, not just in this session, across the day. It's been really good, really interesting. So thank you for that. Big thank you to our sponsors of the day, Corn Miner, Connected Data, and Max Contact for their support. It's very good. This helps enable these events, so we really appreciate that. So thank you. And obviously a big thank you to the speakers across the day. They're all listed there. Really great insight across the whole of the day. And yeah, as I mentioned before, these sessions are recorded, so we will share them at a later date. If you've registered today, you'll get reminders about that. They'll be available on demand. So yeah, no, thank you for all the speakers in those sessions. And then obviously we've got some events coming up later on in the year. Our face-to-face version of this event, I guess, but we slightly rename it. Credit and Collections Technology Think Tank is going to be on the 23rd of November in Manchester. So we hope to see some of you at that event. For similar format to this, but you get to see people in person, a bit more networking. And yeah, we'll decide those themes for that at a later date. But yeah, that'd be good. And then in the evening, we have our 7th annual Credit and Collections Technology Awards. Again, I hope to see some of you at that as well. And we're talking, looking at the different areas that some specialists in customer engagement, etc., for that event. So that would be really good. But I'd like to round up by saying a massive thank you to our panel for this session, so Anthony, Mark, and Louise for that. That's brilliant. And obviously, big thank you, virtual round of applause, if that's possible, to Chris Warburton for chairing the event today from our strategy. It's been really interesting and insightful across all 4 sessions. So yeah, thank you, especially to Chris and to everybody who's contributed today. And obviously, everybody who's interacted, provided us with lots of questions. That will be rounded up on the Credit Connect website probably next Thursday. But for now, yeah, let's round up and say a big thank you to everybody out there and our speakers today and Chris Warburton, and we'll see you all soon. Thanks a lot. Cheers. Bye-bye.